So profit after tax was just under 19 million compared to about 3 million in the third quarter of 2025. So a solid, a solid financial quarter.
Hello, you're watching Proactive. I'm joined by Mark Learmonth. He's the CEO of Caledonia Mining Corporation. Mark, very good morning to you. Could you start by walking us through the key highlights of Caledonia Mining's third quarter financials?
Yeah, thank you. I think I'd characterize it as being a solid quarter, underpinned by solid production. Blanket produced just over 19,000 ounces for the quarter, sold about 20,000 ounces. And then clearly, so that was good. We had a couple of production headwinds, but we overcame that. Clearly helped by the gold price, which means that revenue was up by over 50% to just over $70 million for the quarter. And that flows through into a strong performance in terms of EBITDA. So EBITDA for the quarter was about 33 million, compared to just less than 13 million in the comparable quarter. And for the year, for the 9 months of the year, EBITDA is now just short of $100 million. So that went through down to the bottom line. So profit after tax was just under 19 million compared to about 3 million in the third quarter of 2025. So a solid financial quarter.
Mark, what measures has the company implemented to manage costs?
Yeah, I think we need to recognize that Blanket is a very different operation now to what it was 5 years ago before we commissioned Central Shaft. So at the moment now if you look at the depth from which we're hoisting material in 2020, we were hoisting about 600,000 tons from 750 meters below surface. So that's about 450 million ton meters. Now we're hoisting considerably more than that, probably 830,000 tons this year. From most of that's coming from 1,200 meters. So we've pretty much doubled our ton meters. And so even though we're using our electricity more efficiently, that does flow through into higher costs. If you benchmark Blanket to other similar, relatively old, deep level underground mining operations, we're not actually out of line. But having said that, we're not complacent. We've put measuring equipment in, so now we're measuring exactly where we're using electricity with a view to being able to reduce our overall consumption. And the other thing we want to try and do over the coming years is further reduce our use of diesel in the energy mix. The stuff we get from the grid is about 12-13 cents a kilowatt hour. What we get from diesels is about 45-50. But even though we only use about 2% of our power coming from diesel, if we can reduce that further, that would help to reduce those costs a bit. In terms of consumables, we continue to see increases in our consumable prices. So looking at the rods that we use in the rod mills, that price has increased 10% per annum each year over the last 5 years. So having said that, again, we're looking very closely at those areas within consumables where we think we'll be able to get those costs down. Particularly one of those areas right now is looking at the trackless equipment, which is costing us a lot of money. Then the third area that we're looking at is we've installed clocking systems, so we can hopefully now manage our workers more effectively in terms of making it more efficient for them and hence for us in terms of how they get access to the working areas underground and thereby reduce overtime working and reduce employee fatigue. So there's several initiatives underway, but I've got to say, if people think we are not going to be going back to Blanket producing at an on-mine cost of $850 an ounce, which is what we enjoyed in sort of 2020, 2019.
Can you update us on progress at the Bilboes and Motapa projects?
Yeah, we're making great progress on Bilboes, and I think in the press release we put out this morning, we used the word imminent. So we do expect to give an update as to where we are and where we're going with Bilboes imminently. So can I just leave that for the time being? On Motapa, we continue to do exploration. That's going well, and we would expect to be in a position to declare a modest maiden resource sometime next year. Now, clearly, the maiden resource isn't the end of the game, but it should be sufficient to give people comfort that having spent a relatively small amount of money, just over $8 million, to buy a very large package of land, there is definitely gold in that in those hills.
Last week, you announced that July Ndlovu had become a director of the company. How do you believe his experience will strengthen the board?
Yeah, we're very excited about that. For people who don't know, July's had a long career in the mining industry at Anglo Platinum, and then more recently at a South African coal producer, an Australian coal producer called Thungela. Over his long career, July's constructed projects with a value of more than $120 billion. And so as we limber up to proceed to implement Bilboes, that experience on the board as a NAD, let's be clear, he is a NAD, not executive director. He's not an executive member of the executive team, but that experience will be invaluable to us. So we're very excited and very pleased to have secured his services on the board as a NAD.
What should we be looking out for from Caledonia as we approach the end of the year?
I think the critical thing will be the imminence of an update on Bilboes. I think that's going to be the most important thing.
Okay. Well, Mark, I'm sure we'll be chatting to you again soon. Thank you very much for the update today.
Good. Thank you.
Mark Learmonth, the CEO of Caledonia Mining Corporation.